After testing over 500 different indicators across every market condition, this momentum-based candle coloring system has the highest accuracy I've ever seen. It uses pivot levels and ATR volatility to determine exact momentum states, then colors your candles accordingly. Green for buy zones, red for sell zones, orange for stay out. And in this video, I'm going to break down exactly how this works and give you the precision timing strategy that makes it so accurate. Let's get into it. To add this indicator to your chart, first, head over to TradingView and pull up any market you want. I'm using the 15-minute time frame on GBPJPY, but this works on any market, any time frame. Click on indicators and type in step channel momentum trend. Make sure you select the one by chart prime. Now, this isn't just another trend indicator you're familiar with. What makes this the most accurate indicator I've seen is its structural midline approach. Instead of using smooth moving averages that lag, it calculates the midline as the average of the most recent confirmed pivot high and pivot low, thus creating a step-like horizontal line that only updates when new structural shifts are confirmed, eliminating lag completely. And around this structural midline, the indicator builds dynamic ATR-based bands that expand and contract with volatility. So when price is above the upper band, candles turn green, indicating strong bullish momentum. But when price is below the lower band, candles turn red, showing strong bearish momentum. Now when price is between the bands, candles turn orange, warning you to stay out because there's no real directional momentum. It's like having market conditions color-coded for instant recognition. Most traders struggle because they rely on random signals without a clear system. That's why we focus on structured strategies and automation, so you can study how these tools work step by step, without guesswork or emotions. If you want to learn more and see exactly how these strategies are applied in real market conditions, click the first link in the description. Now, to get the most accurate signals possible with it, let's get your settings right. Double-click on the indicator to access the settings panel. Set your pivot length to 10 for most time frames. This controls how the algorithm identifies swing highs and lows for the structural midline. Lower values make it more responsive, but can create noise, while higher values are smoother but slower to react. For the ATR period, use 200 as this longer period ensures the volatility bands adapt gradually to market conditions without being overly sensitive to short-term spikes. For the multiplier, which determines the distance of the momentum bands from the structural midline, I recommend you set it to 0.6. Under the Style tab, make sure candle coloring is enabled for the body, wick, and border. This ensures complete visual clarity when momentum states change. Finally, enable the momentum state label so you can see momentum up, momentum down, or range displayed at the current candle. Once that's done, click OK. Now let's put it all together into a complete trading system. For long entries, wait for candles to turn green, a signal that price has broken above the upper momentum band with confirmed bullish pressure. But don't enter immediately on the first green candle. You want to wait for the momentum to sustain for at least 2 to 3 consecutive green candles, as this confirms the breakout is genuine and not a false signal. The structural midline acts as your dynamic support level. In strong uptrends, price rarely closes below this line. For short entries, wait for sustained red candles showing price below the lower momentum band with confirmed bearish pressure. Again, wait for 2 to 3 consecutive red candles to confirm the momentum shift. The beauty of this system is the visual clarity, not guesswork. Green means buy zone, red means sell zone, orange means stay out. Now, knowing when to enter is just a piece of the puzzle. You also need to know exactly when to exit, and the step channel provides crystal clear exit signals. For long positions, watch for the first orange candle after a series of green candles. This indicates momentum is fading and it's time to take profits or tighten stops. Note, if candles turn red, exit immediately as momentum has shifted against your position. For short positions, the first orange candle after red momentum signals potential exhaustion of the bearish move. Red to orange transitions often mark the end of strong directional moves before ranging conditions begin. Before I show you the next strategy, remember this: learning indicators is one thing, but applying them within a structured process is what really matters. That's exactly why we've created a place where you can review these strategies, see live examples, and study them in real market conditions. Just click the first link in the description whenever you're ready to explore further. Now, different markets require specific optimizations for maximum visual accuracy. For scalping, 1 to 5 minute charts. Set pivot length to 5 and multiplier to 0.4. Scalping requires maximum responsiveness to catch quick momentum shifts. Keep ATR period at 100 for faster adaptation to intraday volatility. For swing trading, daily charts, use pivot length 20 and multiplier 0.8. Swing trading benefits from smoother signals that filter out short-term noise. Increase ATR period to 300 for more stable momentum bands. For forex, set pivot length to 12 and multiplier 0.5 for major pairs. Forex markets have unique session-based momentum patterns. For crypto, use pivot length 8 and multiplier 0.3. Crypto's extreme volatility requires more sensitive settings to catch momentum shifts early. For stocks, set pivot length 15 and multiplier 0.7. Stocks trend more consistently, allowing for balanced settings. The key is matching the sensitivity to your time frame and market characteristics for optimal visual feedback. Thanks for watching, and I'll see you in the next one.